Hello everyone, this is Rahul Dahatonde. Today we are going to review lesson number 3 from Rich Dad Poor Dad is mind your own business. Before that, just a recap. In my earlier two videos, we have done the review of earlier two lessons. First one is Rich don't work for money. They have the money, work for them. And the second lesson was financial literacy. So these two chapters is really prerequisite for today's chapter, that mind your own business. Before going into much deeper in this chapter, I would like to discuss on some of the important aspects which we discuss in lesson number 1 and lesson number 2. In that, we discuss 5 financial aspects that's really important to understand. First one is that income, second one expenses, third one assets, fourth one liability, and fifth one is the cash flow. These 5 aspects help us to understand the finance in a much better way, and that are the pillars for our financial freedom, financial growth. So quickly to explain you, what are the assets? Assets are the underlying instrument after your investment putting money in your pocket. That's are your asset. A good example of asset is maybe a real estate which gets appreciated after some time frame and then puts some money in your pocket that gives some sort of return. Second is liabilities. What are the liabilities? Liabilities are the instruments or your investments that takes out money from your pocket. Good example is that if you are buying a furniture, diamonds, car, there is some sort of cost involved that takes out the money from your pocket. However, in some of example, maybe that may be asset or liability based upon that if it's putting money in your pocket. But at high level, these are the liabilities. So we discuss asset, liabilities. Third one is income and expenses. What is income? Income is nothing but the money which you earn by doing some sort of a job. That's your income. What is expenses? Expenses are nothing but your day-to-day expenses which you required. That is for of your utility bills, your insurance premiums, and so on. These were the 4 important aspects, and fifth one was the cash flow. Cash flow is nothing but money is coming and where money is going. That's define the cash flow. Now let's drill down the today's lesson, mind your own business. This is very interesting lesson, and author has given quite a good examples here. So first example author has given is, and I also really like that, of McDonald's. Ray is the owner. He purchased McDonald's from the McDonald's brothers, as everyone is aware. When once a time he was invited to one of the university to give the lectures to the student on our business and motivation standpoint. There were a lot of discussions happen on his business, so that, and the purpose of that meet was should understand the business, and that was for that reason there was a meet. When Ray asked to everyone, what's my business, then all students said that yeah, it's your business is selling a hamburger. That time the Ray quite laughed and said that no, that's not his business. His business is dealing of real estate properties, right? So for McDonald's, he is dealing the properties, he is buying the properties at the prime location. McDonald's owns the properties at all the prime locations, and that's the main business of the McDonald's. Strange, right? But yeah, it is. That's what correct. So with that, what the message Ray wanted to give it is that your profession and your business might be different. We should understand the difference between what is profession and what is the business. You might be a banker, but are you owning that bank? No, right? You may be a IT professional, right? But are you owning IT companies? No, right? That's your profession. But your business, what is your business? So here the author is giving a best examples that we should put more focus on our building of our asset columns. You can do your daytime job, but your business should be to focus on your asset columns. Everyone should invest consciously in assets that puts revenue in your pocket. That's also become as an additional income for you. And as and when the asset columns get grown, you would see more returns coming in your pocket. By doing the again reinvestment in the asset, your asset columns further get enhanced, further get bigger, and your ratio of money coming in your account is also getting increased. And this is the crux that we should mind our own business. This is how the rich plays with the money. So what Robert Kiyosaki given some sort of examples here, that okay, where we should invest. Now investment is it's a quite crucial decision, and I would like to give a disclaimer here. Whatever thoughts, things mentioned in this video are based upon my understanding, which I have gone through the book, and it's just only for the reference purpose. You can do your own investigation, own analysis, and based upon go for the investment. So Robert has given some sort of best examples in these books where potentially we should invest in. What are those? First one is start the business where your presence is not required. Someone should run that business and you should get some sort of money out of it. If you need to work in that business, then it's become your job. So that's number one. Start some sort of business. Second is buying of stocks, buying of shares of good companies. Third, bonds. Invest some sort of money in bonds. Fourth one, real estates. That gives the money. Fifth one, create some sort of intangible assets. Get the loyalties for the musics and so on. Next one is identify any kind of business that has a value, that has a real value. There is already a ready markets available, and that's going to put money in your pocket. So these are some of the examples, categorization where we may put our money, we may invest and expect some sort of a return. What further Robert Kiyosaki has mentioned that once a dollar, whatever you earn, goes into your asset column, ensure that it's never come back, and that dollar should become your employee. The money should work for you. So that's how the investment should be there. And you know that the money has a capacity. Money can work 24/7, and it can work for the generations as well. Very important message to understand. So ensure that there is a proper investment and your money becomes your employee that should work for you. Okay. Next important aspect Robert has explained in this book is what parent actually should teach their young generations. They should teach them how to expand, how to build an asset at their younger age. So financial literacy is very important. So that's the one of the message. Whole life, if you see, people work for someone else, and that's the product of their financial stability. The one of the most important other aspect what Robert Kiyosaki has covered is about the luxuries. Everyone actually wanted to buy something, right? If you earn money, definitely we wanted to spend it. As and when our money or income goes, automatically the expenses also goes. No harm in that. But about luxuries, what Robert has given one example. The difference between how rich people, poor and middle class people go for it. If you take example of rich people, they buy the luxuries at the end after doing all the investment, whatever is the leftover corpus, then they go for the luxuries. That's the way rich people go for the luxuries. However, other side, poor people and middle class people, they go for the luxuries first. They buy the luxury items first, fancy watches, diamonds, fancy cars, and whatever is left over, if in case, then they put that in the investment. That's the difference one about buying the luxuries by rich people, mid class and poor people. Second, the rich people buy the luxuries from the corpus, from the revenue generated from their assets column, and the poor people or middle class people, they buy the luxury items from their blood and sweat. One of the big difference here, we should understand it. So buying a luxury items is not a problem. The problem is that when you are buying, are you really financially stable and can afford that? Makes sense, go for it. If it's not, don't go for it. That's the one of the second aspect. Also Robert Kiyosaki has covered that on the investment, right? We do stocks, bonds. If you understand the investment and you like that investment, then only go for that investment. If you don't understand it, then don't go for it. Don't do that. Don't invest in such asset class if you don't understand. If for the investment, whatever actually you wanted to do, you should do thorough analysis of that. Understand the dynamics of the company which you are planning to buy, to invest in. Understand the market conditions, and then only go for that. With that, I would like to stop here. I hope these videos are helping. The overall purpose of making these videos is, number one, to add some sort of values in others' life, those who will watch those videos, to get some sort of benefit on the financial standpoint, and also it's also helping me to improve my knowledge. With that, thank you so much. Just before closing, I would like to request to everyone, please help to like and subscribe the channel. It's free for you, but it helps a lot to me. Thank you.